Good afternoon, everyone, and welcome to Stock Market Today. It's Coram here, and we saw the stock market hold strong after a bullish winning streak, so still in a strong position. And as always, we've got some interesting stocks to talk about, and joining me to discuss is my colleague, Ken Shreve. Ken, what do you have for us today?
Yeah, I mean, this market is still acting strong, Ali. We had a little downdraft at the open, but held pretty well. NASDAQ lagged, but overall a strong session. So let's take a look at a few stocks here. AGX, a company called Argan. Haven't looked at that one in a while. IBM, not a name we normally talk about, but a lot of stocks are participating in this recent rally. And finally, Sprouts farmers market. Has the big money already been made here, or does this still have some more upside? We shall
Great
discuss.
question. Yeah, we will discuss. Okay, we will get to those stocks, but first, let's take a closer look at the major indexes with the NASDAQ snapping a 6 day win streak, but a mild decline here, Ken, down just 0.2% on the day, where the other major indexes were up on the day. So the S&P 500 continuing to add to its gains here, up about 0.4%, now up 4 days in a row. Meanwhile, the Dow up almost 0.7%, reversing higher on the day, and the Russell 2000 up about 0.4%, also a little upside reversal there. So it seems like the Nasdaq down on the day, but pausing in a very strong position.
Yeah, I mean, this is just more of the same, Ali. I mean, let's just point to that follow through day again on April 22nd for the Nasdaq here, and nice move from April 22nd. Yeah, right there. And then look at those the two down days that occurred. What 3 or 4 or 5 days later? The two down days there. The index tried to go down both of those days, closed well off lows. There were still, buyers around. Then you rallied a little more, had a modest little low volume 2 day decline, rising in heavy volume, and now you're just holding tight in light volume here. So this market is still quite strong. I'm sure there are still bears out there, but this is but just really the type of market that you want to see after a follow through day. Lots of stocks participating here, and it's been a while since I've seen price action this strong.
Yeah, we've seen a lot of strong action on the index level and underneath the surface as well. It seems like more stocks are joining the party, forging the right side of bases, and perhaps in process of setting up alternative new entries, some add-on buy points. Okay, so let's also talk about the S&P 500 here, up on the day.
Yeah, this one actually probably had the best day because it was down with the Nasdaq, maybe not as much, but it did reverse nicely higher here, ended with a gain of about 0.3%. And yeah, you can see a lot of accumulation in the S&P 500 as well since that April 22nd follow through day. We've been talking about a market that really has just not seen, any distribution, virtually no higher volume declines since we saw the sign of strength, and you can see that, very easily in the S&P 500. Only 3 down days since that sign
Incredible.
of strength on April 22nd. So it's strong. We're talking about a market where some stochastic oscillators are maybe pointing to an overbought market at this point. And we tried to go down today. There's still buyers around. If we do, eventually start to pull back here and digest some of these recent gains, like we've been saying, we'd like to, see that happen in tame volume. If we start to see distribution days cluster become more frequent, then that's a sign we might want to start playing a little bit of defense. But seems like it's
Mhm.
a good environment to be fully invested here.
Absolutely. Which, I think even though we are having an increasingly bullish bent here, Ken, it does make making new buys at this point a little tricky because you can see the market go up for quite a while without a pullback. But at the same time, the higher you go, the more at risk you are to said pullback. So, like you said, being fully invested here and really using that follow through day and other signals along the way to incrementally scale up means that hopefully a lot of traders out there are in a position to let their winners run and be patient for those new add-on entries to develop, as we're expecting a potential digestion of some sort. Who knows when we'll get it?
Yeah. I mean, we touched on this on yesterday's show, and talked about the number of stocks that are actually still forming bases. A lot of them have run right up the right side. They're retesting prior highs, and we're just kind of waiting to see after big moves up. Maybe just to give a little bonus, for look at Robinhood, for example.
There we
There's
go.
a lot of names that look like Robinhood right now, and here's a stock that has done a
Mhm.
good job forming the right side of a base, and now you have 2 down days. Maybe now it's starting to form a handle area. So the market sometimes doesn't do what you want it to do, but a lot of these stocks that are building the right side of bases like a Robinhood, if we can start to see them drift lower in light volume, and we're seeing Robinhood do that now, that could pave the way for a nice little handle, and possibly another breakout attempt here. So seeing a lot of cut bases. If the handle
Mhm.
was not forming here for Robinhood, and it went right through that high of 66, 91 without any consolidation, that's a much tougher buy, because it has made a strong move after hitting that low of 29.66. It
Yeah.
digested gains a little bit, but after several up sessions in a row, you're seeing a lot of cup bases now forming, and yet stocks haven't started to drift lower yet, and some are just going right through the left side high. Those are riskier buys, only because the move has been pretty explosive and there hasn't been much consolidation. At least with Robinhood, we're seeing a little bit of consolidation here. So we'll see if it can build a good
Yeah.
handle.
Yeah. A worthwhile bonus stock there, Ken. I mean, yeah, it's doubled off the lows. So
Exactly.
deserves a little bit of a break at this point. We were talking about the early entry as it digested when it got above the 50-day, also around that prior midpoint, just under 50. But now, yeah, I would love to see a handle develop here.
It's been an explosive move for the stock market that we've obviously documented. It's been an explosive move for a lot of leading stocks as well. But you want to be careful, as we always remind people about. Want to be careful not to chase, and that is easy to do right
Hmm.
now, especially with a lot of these these cup bases forming, and not seeing these downward drifting handles yet. So and you mentioned Robinhood. It's doubled in what a month's time thereabouts. So
Yeah.
just let's see how this downdraft progresses. And
Mhm.
but this is the type of action that we're looking for. Not only would you want to see the broad market pause a little bit here, but some of these leading growth stocks as well.
Mhm. Okay, so we looked at the index action and it talked about the landscape of how stocks are shaping up generally. Let's also take a look at a couple of ETFs. Ken, you wanted to highlight IBIT. I do own this. This is one of the Bitcoin ETFs. This is pausing near highs.
Yeah, I mean, this is also compelling. Obviously, Bitcoin has been a big participant in this stock market rally. I think the actual, Bitcoin itself is trading just over 103,000 right now. So the way that IBIT is setting up here tells me that certainly, a breakout attempt, if the market stays healthy, and headline flow, economic data, Fed headlines, if it generally stays positive, I mean, this one definitely has a chance to break out. But like the market, like a lot of stocks here, made a big run, didn't double, but 43 up to 60 in a fairly short amount of time. But you can see 2 days of declines here, really still showing a lot of strength and support. And at this point, even a pullback to the 10-day
Mhm.
moving average would be uh, what Mike Webster, our market strategist, would call normal and healthy, or healthy and normal. Just a little pullback here. So, it's digesting gains very healthy, and it's still a breakout candidate here, I think.
Yeah, it's about 3% above that 10-day moving average. So definitely not out of the cards to see a normal and natural. I think that's the catchphrase you were looking for there,
No, that's
Ken.
what I know. I got it close, but it wasn't quite what. Yeah,
He does say
normal and
he does
natural.
say healthy too.
Yeah,
So
that would be normal and natural. Yeah,
normal
normal
and
and natural
natural.
for a little pullback to a short-term support level here.
All right. Let's also talk about XLU. What are you seeing with utilities? Definitely looks like they outperformed today, up 2.2% XLU.
Yeah, I was looking at what really the top 10 holdings in this ETF to see what really moved it. CEG is a top
Mm.
10 holding here, and this is another former leader. Fundamental still a little, so-so here, but a stock that has rallied nicely off lows. We're still keeping an eye on some of these nuclear firms like Constellation Energy, but XLU made a nice move today. So interesting. The market had a little downdraft here. This was actually the top performing S&P 500 sector today. So market maybe still a little defensive today, but this could be a setup day as it tries to break out over last week's high. So still watching the utilities here. Remember, this is a sector. It's an industry where there's a lot of data center sort of ancillary data center plays here, where you've got utilities that are supplying power for many of these data centers that are going up all around the country. So makes sense to keep an eye on the
Mhm.
utilities. I think it was just interesting to see some outperformance in this ETF today.
Yeah, you're absolutely right, Ken. I think with Meta and Microsoft earnings giving a little bit of a boost of confidence about the importance of that artificial intelligence infrastructure rollout, when that was a big concern when DeepSeek hit in January. What was the future going to hold for a lot of this AI infrastructure spending? So I think that was a good little boost there. And then this week with NVIDIA, really ramping
Absolutely.
it back up. So it seems like you're starting to see that AI theme come back into focus. And it does really include a lot of those utility infrastructure type plays, as you mentioned. So
Yeah,
it'll be interesting to see. Go
yeah,
ahead.
absolutely. So I think utilities, even though it's typically a very defensive area for investors where they can go and kind of hide and get dividend yield, there are some legitimate growth stories now popping up in the utility space. And one name that comes to mind, NRG Energy. This is another big data center supplier. Look at the move that this
Wow.
stock made earlier this week, and it is holding gains. So this is just a diversified utility that's acting really well in this market.
Yeah. Huge move on earnings and now up 30% for the week after breaking out 4 weeks ago. Very
Yep.
incredible comeback there after a big digestion. All right, let's move on to a couple of other stocks we want to highlight in the heavy construction group. AGX looking good on a 4 week win streak here, up about 7.7% for the week. And that relative strength line is at highs, Ken.
Yeah, I believe this is still a sector leader. I know it's been in this screen recently, and in the heavy construction group, it's you can see that group is in the top 20% of all of our industry group rankings. So very strong. Basically, a provider of engineering and construction services to the power generation market. So this is also sort of data center adjacent. But remember, we're talking about all these stocks that have run off lows and have formed the right side of their bases. Well, here is an example. Question is Argan, now that it's approaching that 190, 146 high, is it going to start
Yeah.
to come in and maybe do what Robinhood does here? Just kind of pause, take a little break. You can see it tried to pop out today, closed off highs, but this is still a nice setup. You've got earnings a few weeks away, but good one to watch here. It has rallied back nicely and still very compelling fundamentals here as well. And again, just a lot of adjacent data center plays to consider here. But in the
Mm.
heavy building sector, heavy construction group, Argan looks like one of the better names at this point.
Yeah, triple digit growth for 3 out of the last 4 quarters on the bottom line, and a general uptick in top line growth as well over the last couple of years. So, strong fundamentals and technical action, as you mentioned, Ken.
Yeah, we'll see those estimates again on the weekly chart. Estimates look a little bit light going forward, but I assume part of that has to do with difficult year-over-year comparisons. You can see that down 7%, down 19%, down 17% in the earnings area there. Those that $1.84 is being compared to a 222 where earnings were up 149%. So those are just kind of tough comparisons. I don't think this mean this is a growth story that is going to be slowing down anytime soon. It's kind of tough comparisons that the company is coming up against.
Okay, let's move on to IBM. We're also starting to see, the likes of IBM and Cisco turning up the heat lately, with IBM up 3.4% on the verge of a breakout. Ken, this is not a fundamental rock star. It's a very well established blue chip, slow, pokey, single digit growth, but a compelling chart.
Yeah, and probably a company that was a little late to the cloud transition, and maybe a company that was even a little late to, AI infrastructure. But it's sort of a new focus of the company now, and like you said, it is a mega cap, 250 billion market cap, and it doesn't have the fundamentals that we like to see. Typically, we like growth stocks that are, growing at least 20 to 25%, but in this market, it's a stock that gives you a pretty good dividend yield, I believe, and right at the top of a base here. So, 2.5% yield, vying for a breakout here with a pretty decent looking relative strength line. Again, fundamentals. This company obviously has passed its biggest years of growth, but it's just a good steady blue chip that has been trending higher for some time. We're in a healthy market now after a very, very sharp pullback for tech stocks. So you want to pay attention to setups like this.
Yeah. And Ken, I think this also is a good place to briefly talk about portfolio management, right? You don't want to have a bunch of Robin Hoods in your portfolio that are super whippy. Of course, it can pay off when you catch it right. We doubled off the lows, maybe not from a proper entry point, but you have something like this. It's a little bit more sleepy, slow, steady, but still, it's been outperforming the S&P 500 for about the last year or so.
Yeah, I mean, there's nothing wrong having a little mix in your portfolio. For the leaderboard model portfolio, we definitely tend to gravitate towards growth stocks, but we do try to keep that in a lot of different industries, and we've got large cap stocks, we've got small cap stocks, so try to keep it varied.
Good
Even though
mix.
IBM is not the fast grower that it once was, far from it, still seems to be executing pretty well here. The return on equity is very, very solid at 39%. That's generally an indication of a well-managed company. So, again, in an uptrending market that we're in right now, some of these large cap techs have
Mhm.
starting to show signs of life.
Exactly, yeah, and indicative, again, of that comeback in AI and technology, as you said.
Yep.
Okay, let's go to SFM. This is Sprouts Farmers Market. What a move this stock has had over the last couple of years. It is in base building mode here, working on a handle. So as the market has turned up the heat in recent days and weeks, this stock has actually pulled back, Ken. What do you make of it? Because it's had a big move, it's got some solid numbers, so it seems watch list worthy.
Yeah, it is. It is. And I wanted to talk about Sprouts. First of all, it hasn't been discussed on the show for some time, but it is setting up in a base here. We talk about how the right side of a base forms, and then a stock will drift lower. Sprouts did that for a couple of weeks, came down to its 50-day moving average, and found support. But while Sprouts was forming this handle, the market has been going up. So not surprising to see its relative strength line lower here. But we're still going to keep an eye on this stock. They're still, I don't know if they're early in their expansion, but they definitely still have big expansion plans ahead. So that could continue to help the company's fundamentals. When I look at the weekly chart, it's hard not to ask the question: has the big money already been made in this stock, right? Because the $20 stock that ran up to 180 thereabouts. So you always want to pay attention to how much a stock has gone up. Obviously, that price move from 20 up to 160. They were executing, expanding, and they're still executing. They're still delivering strong growth. But is this a later stage pattern? Quite possibly. Nonetheless, you still
Mhm.
want to watch it because it's a good setup, and earnings are out of the way. So this is a technical setup that could yield a breakout. I'm just kind of have mixed feelings just because of the
Yeah.
huge move the stock has made already.
I agree. And what I do like about it is, in addition to the stellar track record of price outperformance, is you do have this acceleration in earnings growth, which can be seen on the quarterly numbers as well as the earnings line, which has accelerated lately. So like you said, expansion, and it's showing up in the numbers. So for investors who are interested in potentially playing a name like this in the space, if it were to clear this trend line within the handle, perhaps get above the high from a couple of days ago. This is an area where you can manage your risk because of where it is versus that 50-day line. So if you wanted to place a trade here, whether or not it's too late in the game, well, at least you have a stop in place if the move ultimately fails.
Yeah, and I think fundamentals are still in place here very very much. So again, very high, very low debt at Sprouts, yet high return on equity. So again, another indication of a well managed company. So to me, there's still a growth story here. Obviously they're going to have to execute and continue to deliver that strong top line growth and bottom line growth. But I wouldn't bet against it. Just you want to just to keep in mind that it's made a big move already. It is a good base, setting up in an uptrending market, so it's definitely worth watching.
All right. And before we go, let's check in on the early reaction to Kava earnings out after the bell, a former leader last summer that has fallen from good graces, perhaps, but trying to make a comeback off lows, 70 to 100 in the last couple of weeks. That's not bad at all. But if you put that into context, with the prior high at 170, this is still a long way below its prior highs, about 43% or so. Looks like the early reaction here, Ken, shares down 3% on the earnings report.
Yeah, and this again, obviously not a picture of technical health before the report. A kind of pullback from 160 to below 80, so that's more than 50%, which is just is a bit excessive. A lot of people are saying, well, there's still a growth story going on with Kava Group too, and I don't doubt that they delivered another strong quarter of bottom line and top line growth. But this is a stock that's always sold at a premium multiple to a lot of its restaurant peers. The market gives it a high valuation because it's because of its bright growth prospects. So this stock is definitely still in the early stages of growth. So held to a high standard because it sells at a premium valuation. So we'll take a look at the report and see what the numbers look like. Again, wasn't actionable before the report. Down 3%. We'll see what the numbers look like.
Yeah. Sounds good. All right, Ken. Thank you so much. We appreciate it.
My pleasure.
And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live with special guest Don Vandenbord of Revere Asset Management. We look forward to welcoming him back to the show. We'd love for you to join us starting 10 minutes before the opening bell. Investors.com/IBD Live for all the details. We will see you there, and then we'll also see you right back here tomorrow after the close to wrap up the week with Mike Webster. We're on Power Trend Watch. What exactly do we need to see to get that power trend? Well, we will break that down and so much more. So we'll see you there tomorrow after the close. See you then.